My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to a special West Coast edition of Mad Money. Welcome to Cramerica. To make friends, I'm just trying to make you a little money. My job, not just to entertain, but to explain. So call me, 1-800-743-CNBC. Tweet Jim Cramer. Everybody on Wall Street loves to be a contrarian, which is why so many commentators keep trying to minimize the impact of a half-point rate cut. Not me. No matter what common sense dictates, there are always people who think they know better than common sense, and they don't. There are so few advantages to age, I gotta tell you. I mean, I can no longer jump up and down through a full Pink song at a Benioff hospital benefit like the one we went to last night, to name just one age-related indignity. But by just showing up, I knew better than the posers who told us that a 50 basis point cut was bad news because it was somehow a sign of panic. Funny thing, while these critics were polluting your minds as so many tanneries polluted the old Gowanus Canal to the point where it was flammable, the stock market exploded today. Dow gaining 522 points, S&P surging 1.7%, NASDAQ pole vaulting 2.5%. I got to tell you, it was a thing of beauty. The bears initially had their way with the markets, once again distorting a view immediately after the announcement at 2 p.m. yesterday. They fooled enough people to start blowing out of stocks in a frenzy, especially tech, as if somehow those are the stocks that always get hit on a rate cut. That's just not even true. There were also people who panicked, and then there were people who thought that the Fed panicked. Look, they're easily swayed by the market's action. And then just something commentator after commentator came on air, our air, everywhere else, and just echoed this negative narrative out of nowhere. After all, who wants to go against the tide and question why sellers are streaming for the exits? They're going to steamroll you. You don't want to be in the way of that. And you know what? That's really how it happens. That's how the afternoon aftermath of a rate cut, not a hike, but a cut, snowballs into a giant avalanche of people who've been instantly brainwashed into thinking that a 50 basis point easing is somehow bad news. That's what we saw yesterday after 2 o'clock. That analysis was always absurd, just pure foolishness, which is why the market came roaring back today when it had a little breathing time. First, you need to know that a rate cut is never bad for stocks, as long as it's telegraphed. A large rate cut, as long as it's communicated to the media with plenty of time in a considered way, is also acceptable. This time we were set up perfectly by the Fed. They spent about a week laying the groundwork for a double rate cut for the actual meeting, including perhaps sharing some thoughts with one of the most reputable reporters at the Wall Street Journal. They made it clear that they're doing this because rates are now too high versus the declining rate of inflation, not because they're worried about some sudden softening in the economy and big job losses. We don't have those. See, there was nothing really negative lurking. It's just it was the right thing for the Fed to do. Now, that gave money managers some time to reposition before the Fed meeting. Some did, and obviously some didn't. So what was the rational reaction when you read that we're likely to get a half-point cut, not a quarter-point one? Let's go over it. First, when you get rate cuts, that's official confirmation that you are no longer fighting the Fed when you own or buy stocks. The late, great Marty Swag, the best pure keeper of events and the reaction to them in the stock market, always had one really simple precept: don't fight the Fed. When they're raising rates and turning the liquidity spigot off, you got to be more negative. You just have to be. But when they're cutting rates and pumping more money into the system, look, when it comes to the stock market, we're under the reverse Biggie Smalls dictum. More money, fewer problems. Second, when you get a double rate cut, meaning a 50 basis point monster, well, that's going to make tens of billions of dollars come into the stock market from the sidelines. The sidelines have been so lucrative for so long that people in money funds have been coveting their dollars. Sure, there are plenty of folks sitting in 2 to 3 year CDs or treasuries who can't easily cash out. But if you are in an easily accessible money fund, you can see rates are going lower now, right? Which is all the more incentive to put your cash and say, I don't know, how about a dividend stock with a high yield? Got to do it fast because pretty soon the high yielders will rally to the point where they're just mid-yielders. Third, no matter how smart they sound, the people who come on television to argue that the Fed's actions don't matter because, say, the national debt is too big, here's what those people are being: unhelpful. These people are polemicists. They have nothing to do with helping you make money. It's not important to them. You're not important to them. They're speaking to the billionaire class. They crowded out you a long time ago. Remember, we do have all sorts of audiences. Fourth, the winners in an easing cycle are varied and exciting. The losers are obvious and must be avoided. From the moment the Journal reported that there could be a 50 basis point cut, the swatch of what can go higher expanded dramatically. 25 points would have been truly beneficial for home builders if they would just stand to start building a lot more homes. That's something that they've been reluctant to do because rates are still too high. But 50 basis points means lower mortgages for certain and therefore more affordable homes. And it goes way beyond the home builders now. With a double rate cut, the winner's circle includes the stocks with powerful trends that nevertheless have been beaten up. Look, I'm out of Dreamforce. We were at the Salesforce extravaganza yesterday. That was all about AI. Okay, and CEO Mark Benioff has an ingenious plan to help you, the individual, benefit from AI, not just the big enterprises. Yet the stock got hit yesterday, got hit hard. Well, today what happened? People came to their senses. It rallied 13 points. We talked to Lisa Su, the CEO of AMD here, and she has more business than she can handle. Her stock soared more than 8 points. We listened to Jensen Huang, CEO of NVIDIA, talk about how hard it is to ration his chips because they can't make them fast enough to meet the demand. Yet you couldn't give the stock away yesterday. Today it roared 4.5 points, although at one point it was up 6. You can watch Taiwan Semiconductor up more than that. They are linked at the hip. Apple's iPhone 16 was pronounced stillborn by some outfit. I don't even remember their name, even though it's not officially on sale until the end of the week. That was the best opportunity of all, with the stock gaining an astounding $8. I'll give you a little more on Apple later. Of course, at this stage in the cutting cycle, you have to let go of your recession-resistant consumer packaged goods stocks. I told you that the Procter wouldn't work anymore. Colgate ain't working. You got to inject the utilities. They've been real good performers. Now they'll be poor performers. They had the run. It was real nice. They were terrific bond market equivalents as long as their higher yields lasted. But now Wall Street no longer has an appetite for sure stocks that don't take any risk and don't go up a lot then. Okay, that was your game plan. I gave it to you several times. It's the backdrop that's worked over the course of my entire career. If you have any doubt about the playbook, go back and read the part of a rate cut in Confessions of a Street Addict, my autobiography, when I realized how powerful a rate cut could be. It made me look foolish. It's a fun read, though. The Fed's power is immense, and with a 50 basis point cut, they rolled out the big guns. If you want to fight that, if you want to listen to people who babble about the national debt, hey, that's fine. Knock yourself out. The business isn't for everyone. But if you're trying to make money, which I think is really important, you got to accept the fact that the Fed pulled out the bazooka and you can't afford to stand in front of it. You want to be behind it. Bottom line, there'll be more rate cuts, and there'll be more rate cuts, and even more rate cuts. And there'll be more talk about how our country's in trouble, the Fed can't do anything, and nothing matters, and everything must be wrong. But as long as the Fed keeps staging its cuts perfectly, like they did with this one, then your job is to know when you're snowed and bring a down parka when you're snowed with some noise-canceling AirPods. The new ones are supposed to be great. Tune out the naysayers, and you'll be just fine, because the Fed is now your friend. That's all that really matters. Hey, I think we should take calls. Let's go to Rich in New Jersey. Rich.
Hey, Jim, it's Rich from Belmont, New Jersey, at the Jersey Shore, hanging out at Bar A. How are you?
No, I want you to get out of the bar and go to La Dolce Vita and tell Nick I said hi and have the meatball.
Absolutely. I was there last week with the veal chop, the best in the city.
That is a great veal chop. I wear a bib when I use the veal chop. Do you ever have the clam sauce, the white clam sauce?
Absolutely.
All right, I just want to be sure. Now we can go to work. What's up?
So I've been buying this company stock for the past 3 years. It's a diversified company. Got a great CEO. Been profitable for the past 3 months, three quarters. But it's been frustrating. It's a hated stock, very well shorted. Banks hate it because it's competition.
Okay.
With a great CEO with Anthony Noto. What do you think of SoFi?
Okay, I think now the rates are coming down. You're going to see that actually it's more of a technology stock, but it's going to go higher. And I'm so glad that you know how to eat when you're down at the Jersey Shore. I'm out of Long Island, and the food, forget about it. I like Jersey. Now, as long as the Fed keeps staging its cuts perfectly like they did with this one, then your job is just to tune out the naysayers and you'll be just fine. Oh, man, tonight, fresh off the Fed's cut, I'm giving you a data-driven set of potential winners in this tape. Don't miss my breakdown of some names that you want to take a pen and paper out. Plus, exactly 2 months after a massive tech outage, I'm talking to CrowdStrike CEO from the company's conference to get a sense of where the stock could head and a new ally that he might have. And as more growth on the table for Darden Restaurants, I'm eyeing the earnings release from today's best performing stock in the S&P 500. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.